Yeah, let's do
We
it.
can do this.
All right, welcome guys. It's another week, another hour. Errol, you're feeling good. George, haven't seen you in a while, dude. So we can just begin our podcast for Get Together. I don't really know what to talk about though. Like maybe we can start off with like how's your week been for both of you guys?
Um, my week's been fun. Actually, there's so much to discuss,
Okay.
especially the SVB thing. But
Okay,
in
yeah,
terms of the
it's
week,
true.
yeah, I did also have a very eventful week.
Mm,
Let's just leave it at
been
that.
eventful.
How about you
Okay.
guys?
Yeah, yeah. What about you,
Yeah,
Errol?
just checking out George's Instagram stories, nothing in my week can compare to that. I was just kind of, having halal food, going to
Mm.
work, maybe just talking to some random people, nothing too crazy. And then like I check out like George's story and I don't know if we want to talk about that at all,
We
but
don't have
I'm
to
just
go
like
into the details, but I think we can just cap it at you know, protecting democracy has a price. So sometimes you have
I am
to
so lost on this because I haven't been looking at
make some
stories.
sacrifices.
All right, I'll hear the context later if it's like, under the table, but
It's okay. I mean, just some. I can give some context without
okay.
too much. Like there were some opposition political rallies in Georgia that
Mm,
got quite heated, to say the least.
mm.
They ended up achieving what they were planning to achieve, which was like to get this bill, which was trying to implement like foreign agents labeling media as a foreign agent, which is like a pretty dictatorial thing. But they managed to pretty much like take the bill off the agenda thanks to those protests. So just
Oh, I see.
briefly,
oh,
that's context.
Okay, so it's more like a situational thing. I wasn't sure if it's like for startups specifically or like, I had no context whatsoever.
No.
Yeah.
I wouldn't say it's related to startups.
So that's why you're in Istanbul right now, I guess, right? Or is it?
Well, it's that's a longer story. Maybe we can talk about it some other time. But yeah, I'm just traveling back to Kuwait tomorrow, so I
Mm,
just decided to take a stopover in Istanbul. Why not?
nice.
I've never been in Istanbul. I've always flown through Istanbul, so I was like, this could be a good opportunity to check it out.
Yeah. Yeah, yeah, yeah. How is it so far? Is it good? I mean, you showed us the view, but like
The
aside
view is
from that.
amazing. It's like it's an interesting city. It's huge. It's like probably
mhm.
bigger than Shanghai almost. And it's just like Shanghai, it's like separated into two parts. There's like the Asia part, because it's like literally in between Europe and Asia. So there's an Asia part and the Europe part, pretty much like Pudong and Puxi. It's like the two parts
Oh,
of Shanghai.
Yep.
yeah.
And it's a bit like over gentrified in some areas. Like I was literally at this place in the center of Istanbul where they have like gates surrounding a pretty large neighborhood, and the only way to get into that neighborhood is to go through like an airport style security, and they're just pretty much like
Interesting.
trying to keep all of the poorer people
Mm.
off the
Yeah.
streets. And then it's really nice there. It's beautiful, but you walk out and there's like potholes, and I think there's like people that moved to Istanbul after the earthquake, because it seems like there's a lot of homeless people and like people that are probably like leaving the earthquake affected areas. So
Mm.
it's a mixed bag
Yeah.
for sure.
Yeah.
But it's
Okay,
all right. This
cool. Yeah, I mean, it's cool to travel. I certainly want to travel more. Like, having that bug where I'm just like, oh man, I really want to go to these places, but we'll see. Because quite a lot this year is coming up. Yeah.
Yeah.
Okay, where do we go
Well,
from
well,
here? I don't really yeah, what's up, Errol?
well, Thomas, you didn't tell us about your week. I said mine was
yeah.
kind of boring, tame. George is in Istanbul. But what's up with
True.
you? Are you kind of
Yeah.
more on my end or more on George's end?
I don't think it's been boring, but I wouldn't say it has been so eventful as compared to George.
Mm.
Um, I've been practicing a lot of Thai as of late because I have like a test coming up. I know this sounds really stupid, sounds really student like related, but it's like immigration. They would check to see if you're good at Thai. So I've been practicing like nonstop, and I'm like, oh my gosh, this is it's to me actually harder than Chinese. I don't know. Like if you guys ever have to learn Thai, just keep in the back of your head that it's like actually harder than Chinese.
Would you say it's useful in terms of like business and like in general, like is it spoken a lot? Is it hard to get around with just English in Thailand?
Oh, you can certainly get around with English. Like there's no doubt about that. I live like in more the northern Thailand, so I don't live in like Bangkok, right? But you can still do very well with just English. I will say this though, like you lose probably like half of the experiences with that though, right?
Mm.
So if you want to go to like, hiking or whatever, you generally need to know like people that are Thai that can like guide you there, right? Otherwise, it's like if you don't know your way and you can't read the signs, you're a bit screwed. And then the same goes for a lot of like different things like deals, might be promotions, it might be events happening in around the town, it might be a lot of different things, right? Like just recently, it could even be like, where do we go and pay traffic tickets? So car driving is really bad in Thailand, but one thing we were just surprised about like recently is just like they have cameras on the highways to like see whether or not you're like passing lights, right? And so apparently one of us, like one time we were just passing an orange light, but then they took a snap of us like when it turned red. Whatever. So now we have a ticket, right? And we don't know where to like actually
Orange.
pay this ticket, and it's all in Thai, and we asked like all our friends and they are also like, well, we don't know, so we have to like figure this stuff out, right? Like if you knew Thai you wouldn't have these problems, and you can like try to Google translate it, but it doesn't really work. In terms of business though, I don't know, if you're doing like a Thai business, then yeah, but if you're doing like an international business, there is no like real worth unless you're doing like an import export sort of thing, I guess. But I feel like that's too Thai.
Mm.
Yeah. Yeah.
Interesting.
Yeah.
Is it a big population? Is it over 100 million people that live there?
Scattered across, I actually don't know the population number, but I know that Bangkok is certainly the most populous, and then Chiang Mai is the second most, right? So we do have like major cities across the continent, but it depends on where you're talking about. Like I don't know what the population of Bangkok is. I wouldn't expect it to be like anything lower than like Hong Kong or any place like that, right? It shouldn't probably even be more because there's more land.
Uh-huh.
Yeah.
Yeah, there's crap tons of land here, guys. Like right across our street, there's like a banana crop farm thing. And then right across that, that's like rice paddy. So it's like land is just like is abundant. It actually, like we were talking about this, me and my dad, like it's very weird how real estate works here, because from what we'd gather, right? Like Thai people don't like to buy secondhand real estate, because like what's the point of buying that when you can just go and buy like a huge plot of land and build everything from scratch for like really dirt cheap, right? So like the secondary housing market, I guess, is like absolutely abysmal. Like there's really not much point to buying, at least here, right? For like in Chiang Mai, I'm not gonna say in Bangkok. Bangkok I think is a different story, but in general, like because there's so much land, they're still expanding, they're still doing this sort of stuff where you can just buy a lot of land if you are Thai. If you're not Thai, you can't do that. You can't, unless you marry in. You can't actually like as a foreigner buy personal property. Like you have to have a business license or something like that.
Interesting. I mean, it's like that in quite a few places actually. Yeah, in quite a lot of places, like all over the Middle East, you just can't own property there. It's
Yeah.
insane, and it's not like not even with a business license. You just can't. You just unless you were born in Kuwait or something or like Saudi, you just can't own property, which is like so
Yeah.
stupid. Not like anybody really wants to buy a house in Kuwait, you know.
Really? Like I can go in and buy an apartment in Kuwait.
You can't. And nevertheless, the domestic market is the demand is so strong. Like an average house in Kuwait usually costs like upwards of like a couple $1 million, like $3
The
million.
hell? Damn.
Holy shit.
Yeah.
Okay, I did not know that. I mean, I wonder if it's the same in Dubai and Abu Dhabi too, just the UAE.
No, no,
Because
Dubai you can own. The only place in the GCC where you can pretty easily own property is UAE. You can
UAE.
Mm,
Okay.
buy apartments like this.
Yeah,
yeah.
yeah. Because I figured because there was so many international people there, it's a very strong presence. So figured.
Yeah, no, they're like light years ahead of the rest of the GCC. Everyone else has been,
Mm,
especially in terms of like the international community for sure.
I see.
Mm.
Yeah. I don't, yeah, what else should, like, I don't know. We haven't heard a lot from you guys from quite a while because I wasn't here last week, right? So I don't know,
Yeah.
like, if is there anything that I've missed, or like, do we want to go into a specific topic? Like, what are you guys in the mood for?
I want to definitely touch on the Silicon Valley Bank.
Yes,
Mhm.
we can
Has
definitely go into
been
that. Yeah.
has been kind of on my mind the last 48 hours. It just
Mm,
happened so quickly. So that's
yeah.
one thing, but what else? Maybe we can start off with that actually.
Yeah, we can
Yeah.
start off with that. That's fine. And then we can talk about, I guess, finances if we really wanted to. We could branch into a lot of different things, but we'll see where it goes, right?
Yeah.
Sure.
Can we? I mean, I read about some of this stuff. I understand
Yeah.
things to some level, but
Mm.
I mean, George, I feel like you know a lot, the more nitty-gritty details. So I don't know, like,
Yeah.
can you, like, do you think you could give us like a synopsis of what's been going on, what happened, and why maybe we should care?
Sure. Yeah, I mean, it's
What's it matter?
definitely a big event. It's not
Yeah.
something small. Unless you are completely unrelated to tech, you should definitely be mindful of it. Just some context, it was the top 20 banks by assets in the United States, which is huge. And this was one of the biggest bankruptcies since 2008. But what is Silicon Valley Bank? So basically, this bank focused almost fully on the startup ecosystem in the United States, where a lot of startups had their deposits in the Silicon Valley Bank. That's one side of the business where they pretty much took the startup's money, the whole runway. A lot of startups had pretty much the whole runway in one bank. Benefit of hindsight, that wasn't a very good thing to do, but nevertheless, a lot of
Mm.
startups had their money with them. And then on the other hand, what they did is they gave out a lot of loans also in the tech scene for tech startups, where maybe they needed to bridge their round, or there was some sort of like a small short-term loan that they were requesting, and a lot of the loans were backed by equity, by shares of the company, of the startups, which also, benefit of
Oh.
hindsight, is quite risky when there's a downturn in the tech scene, in the tech space.
Yeah.
And then on top of all of this, the key driving force of technology, which is venture capital, those funds stored their money in the Silicon Valley Bank as well. So whatever
Mm.
money they haven't used yet, and right now a lot of funds are just sitting on money. They're not making active investments right now because everything seems overpriced. Why not just wait for a little bit? Now, a lot of the funds do not have access to that money because of the Silicon Valley Bank bankruptcy. And actually, there's a fourth element to this, which is the investors into the funds. A lot of them were Silicon Valley entrepreneurs, right? And then they were able to exit, and then they were able to invest into other funds. A lot of them also had their money in deposits in the Silicon Valley Bank. So this is pretty much like it encompasses the whole tech scene in the Silicon Valley. And what happened was just one thing: it's interest rates were going up. Interest rates weren't going up since 2021. All of a sudden, they did, and that basically meant that the whole tech scene turned out to be extremely overvalued. And that's pretty much all you need to know. And then it all kind of it was like a domino effect where the startups were burning through their money. They didn't have any more money left in the deposits, and they were withdrawing money at a very fast rate from the Silicon Valley Bank. And the way banks operate is that they need to loan out money to make money. They take deposits and they loan them out. But if
Mm.
everybody is trying to take their deposits back,
Bank run.
then they
Yeah.
somehow need to get the loans back. And then when they started getting the loans back, the loans they didn't cost as much as before because the interest rates are going up. And interest rates, so the higher the interest rates, the lower the price of the bond, or whatever the debt that you've issued. And then most importantly, it was backed by shares and equity, which also went down because the valuations are going down. So then they realized they don't actually have all that much money that they can make back from all the loans that they gave out. And then the main effect is that in the Silicon Valley, because it's such a close-knit community, which is usually helpful for startups, right? That they can network better, that they can like provide more value add. It had the inverse effect here because everybody was a quote unquote insider, which told their portfolio companies, get the fuck out of there right now. And then the VCs, they have so many startups in their network, everybody knows everyone. It created panic, and that's how a huge bank, like a top 20 bank in the United States, went down in 48 hours because of this close-knit community of Silicon Valley. It's quite an interesting case. But in short, basically this is what you need to know for the most part of what happened with the Silicon Valley Bank.
That's a pretty good synopsis. I would say in like
That's
3
really
sentences, valuations go down, less profit, $1.8 billion loss. Everyone freaks out, pull money out, crash. Like that's right. Like that's kind of what happened. But do you think it's actually going to get better? Because a lot of people are speculating because it's now under like FDIC, it should be like resolved, like upcoming, if not already being resolved.
So like for sure, everybody will get 250K back because that's the like pretty much insurance. If the bank goes bankrupt, you get 250K automatically. But what happens afterwards? Most likely they will be able to receive the money back, but usually it takes time. And what I'm seeing right now is that it's going to take around 3 to 6 months to get the full amount of the deposit back. For most people, at least 50% they'll be able to withdraw within the next months. But we as founders, we know what 3 to 6 months actually means. To a regular business, that's nothing. To a startup, that might be a question of life and death. So there might be a lot of bankruptcies that are going to happen with startups that simply do not have the capital to continue paying to their employees. On the other hand, the VC funds that back them might not be able to give them an extra amount, like a little bridge before they get the money back, because their money is also tied in the Silicon Valley Bank. And even if the funds did want to, and let's say that they didn't have the money, technically they could ask their LPs, the investors into the funds, to provide them with more capital. Those are called capital calls, but they won't be able to complete capital calls if their clients, if the investors also have money in the Silicon Valley. So it's a whole loop, and I think it's going to be a downward spiral for a little bit. It's not definitely going to be the end of like Silicon Valley or anything like that, but this is not going to be a good year for tech. This is bad.
I think it comes down to how like they will recover. I mean, we can say, oh, like this company specifically, right, is going bankrupt, but it's just really who is now the insurer to either like help with this process, quicken it, or is there going to be even more like future insurers, right? I'm not saying like, oh, let's do 2008, because it's not really the same, right? Obviously this is just a small bank in comparison, but like it's just, what is the insurer, like what are they going to onboard another bank to then like pretty much absorb this and then fix it up, or will it just be under the FDIC? Like I don't know what's going to happen yet. I know it's going to take time.
That.
I
did hear that there might be like a bigger bank might just come in and take over, but that was like 24 hours ago. That's when like it first I guess they first reported that they needed, I think it was like $2 billion on the balance sheets. And I just heard that there was like some chat about, maybe a bigger bank's going to step in and then just do a takeover. But I mean, I don't know if that's still going to happen anymore.
What's interesting is that just 3 days ago, I was watching this interview with Warren Buffett, where they asked Warren Buffett why he decided not to bail out Lehman Brothers. Because they came with an offer, and maybe you guys saw this video. It was like recent on my suggestions on YouTube. And basically they came to Warren Buffett and they said that, we want you to bail us out. We have enough capital, like our capital requirements, like we fulfill them. There's actually enough money for there not to be such panic. And then what Warren Buffett told them was, he basically said no. And it all came down to the fact that, as Warren Buffett said, to people, they don't even know what capital requirements are. They don't know what the ratios that the banks operate with, where they say that we have enough like our ratios in terms of how much liquidity we have are enough for you not to be worried. For a general person, for the most part, for the public, it means nothing. And this is purely like irrational behavior, where if there is a bank run, there's no numbers that you can use to prove people otherwise. And even smart people in tech, unfortunately, are also kind of susceptible to this behavior, because it's just human behavior. And that was so interesting. I was like, yeah, that is totally true. That actually, in reality, it's very hard to convince people not to pull their money out in this sort of situation. Even the people that operate with logic, they're still going to be driven by fear of just losing their money. So it makes sense of how it unraveled. Plus, on top of this, 5x what happened to Lehman Brothers in terms of the bank run, because of this close-knit Silicon Valley community. This is the first time this thing backfired big time.
Yeah. I'm surprised they didn't. Sorry, Arrow, you can go first.
Oh, no, you go first.
Like, at the end of the day, it's too triggered by just a lowering of their stock or their equity, like the actual company projected value, right? Like, that's really what triggered all of this. And yet the funny thing is, like, if you take a step back, you kind of understand that they if most of their funds are directed to VC or like early tech that's going in the shitter right now, like as a sector, right? Like, I'm surprised they didn't like diversify sooner, or at least like go to other things that are more standard or more safe, like not just tech. I don't think that's the case, but it just seems like, how could 1.8 billion loss like happen so rapidly, where like that would be even doable for a bank? Does that make sense? Like, I don't know if that sounds terrible. Maybe that sounds really tone deaf to bank people, but like, it's just, yeah, like, how does that happen? It's like bad financial engineering, basically. Like, whoever is running the tabs are actually like doing funds within the bank to raise these funds, and they're literally in a place where, for their perspective, there is no, like, even if interest rates or inflation are doing worse for the American public, that shouldn't necessarily make the bank like harder to do what they have to do, right? Like that, like the bank exists no matter what the economy does, usually, right?
Totally. In very simple terms, what this proves is that all of tech, like pretty much any investment that you make in tech, is a bet that the interest rates are going to stay low. Basically, if interest rates go up, tech has a 1-to-1 inverse correlation, where interest rates go up, tech goes down. And the correlation is so direct that what Silicon Valley Bank failed to understand is that as soon as there's an issue of rising interest rates, tech is just going to go in a downward spiral, and it's just not going to be worth as much. And because they have both, usually, by the way, banks benefit from higher interest rates. They make more money because they're able to take deposits at maybe, slightly higher rates. They pay people slightly more, but then on the loans, they're able to really increase the rates.
Correct.
And they make up the difference. That they make up is their margin. It's their profit margin. So when rates go up, it's really good for banks. But when you are fully invested into tech, both sides, lending and borrowing, you're done for. It's rates increase. This whole thing that started like even before 2021 of just insane valuations quickly, broke down, and the bank went bankrupt. But in very simple terms, that's what happened.
Yeah.
But kind of going to what Thomas was saying before, like, why were they so over leveraged in just tech? Like, I get it. It's Silicon Valley Bank, right? You would expect them to basically be in the whole tech sphere.
It shouldn't have existed. To an extent, it almost shouldn't have existed. It just doesn't make sense. Why would you have a bank that only operates in one space? You pretty much expose yourself to risk. Because as soon as that industry goes down, you're fucked. And it's okay if you maybe expose yourself to one industry on one side and an unrelated industry on the other side. But if both sides are in one industry, this is a very risky like value proposition for you as a bank. On the other hand, here's the thing: it wasn't bad financial engineering all the way till maybe like end of last year, because
Yeah.
as long as the tech stocks are rising, you're making a shitload of money. You're making so much money. You're getting so much more deposits. You're able to lend out money, pretty much risk free, because you always know that the valuation of the company is going to increase. And if anything, you're going to, even if the company doesn't pay back the money, like your last resort of just getting those shares, they're going to increase in value. So you're good.
Yeah.
So it wasn't bad engineering back then, but this year, of course, it just doesn't make sense.
Yeah. Don't they own like before the collapse, they had like, I mean, we say 1.8 billion, that sounds like a lot of money, but like in relation to how many assets they have under management, it was like over 200 billion, right? Comparatively. Like it's like less than 1% of the actual company's assets under management. So when we're talking about like a loss, it sounds like a lot, but it's not really a lot for a bank actually. Like like right like it just caused a lot of panic too. I think bad actors in a sense, or rather I wouldn't call them bad, just like very like reactive actors kind of create a waterfall effect, right? Like it's not just the bank's fault for maybe having a loss, because there's expected to be losses, right? When you're in a recessionary period, maybe not for a bank. I could see like why they're like, why is this losing money, right? But exactly what you said, like if you're aware of like, hey, my guy has account here, oh, this tech guy also has an account here, everyone, like all my friends, and we're all tech guys, like you should kind of realize like what the bank primarily deals with, like what sort of portfolio does it have.
Yeah, I mean, but that's all with the benefit of hindsight. Last year, everyone was like, this is like the best, like one of the best stocks to own. I just want to show you guys the SCB Financial Group, their stock performance, like in the last couple of years.
It's been
'Cause it's
good.
quite, like,
It's
let
been
me show you.
very
It's
good.
literally. It says disable screen sharing. Could you enable screen sharing? I just want to show this.
How do I? Okay, one moment. Let me. How do I?
Because basically, what happened was up to 2021, things were so good for Silicon Valley Bank. It was like the number one stock you could own. And then you'll be able to see what happened afterwards.
How do I allow for them? Wait, I can't change it, bro.
It's in the screen share permissions.
How do you?
Oh no,
how do you
it's
share
working
this?
now.
Oh, it works. Okay, that's
Can you
weird.
see it?
Yes, I can see
Great.
SVB.
So look, like it's been increasing. It went from 156 at the start of 2020, start of the pandemic, all the way to $774 per share in 2021, and then
Just
of
keeps
course
dropping off.
it just keeps dropping, and it's like inversely correlated with what's been happening with interest rates, because somewhere like at the very start of 2022 they realized that interest rates are going to go up, and you can see exactly what happened here. So I think this is what's going to happen with most tech companies, because like this is pretty much SVB Financial Group is an ETF of tech. It's like I don't know, another version of NASDAQ pretty much, but even more focused on like Silicon Valley startups. So yeah, it's like things aren't going to be as great. Things are going to be even worse than I expected, and I really didn't have a very high bar for what's going to happen with tech firms this year. But most importantly, you always have to differentiate between the US and the world. It's not exactly going to be like directly correlated. I think emerging markets, could still be doing okay. Middle East is on fire. Like there's no decrease in valuations there. Like right now we're raising some stuff, and I wouldn't expect it to be as straightforward in this time, like when things are spiraling down in the US. So it's going to be different in every region, but the US is not going to be too good this year for sure.
Well, actually, that's something I wanted to ask beforehand too. Like we're talking a lot about Silicon Valley, the startup scene. What about bigger tech companies? I mean, are they expected to take a hit from SVB, or do you think that they are well diversified enough? They're just too big. They have too much cash. This isn't a worry for them. They should be fine.
they're not directly affected by the Silicon Valley Bank bankruptcy, but
Mhm.
what they are affected by is also this interest rates thing, but they're not as
Mhm.
affected. One thing that you have to keep in mind is that interest rates affect tech companies, but why do they affect the
Right.
tech sector as a whole for the most part? Is because the tech sector makes
Oh.
the lowest margin. It barely makes money, it burns a lot of it. So that's exactly the kind of industry that gets screwed when interest rates go up, because there's no more free money. You have to now pay significant interest for it. No point in burning money that is expensive, in very simple
Mhm.
terms. And then for big tech companies, a lot of them were able to find some sort of profitability. It's true that with COVID, a lot of
Mhm.
things became kind of staple household services that you have to own that are in the digital tech space. And most of them are run and offered by big tech companies. So they're able
Okay.
to turn a profit, and now they're just going to downsize a little bit. They're definitely not going to do any more moonshot projects, but they're
Mhm.
going to be in a much better position than the startups that had their money in the Silicon Valley Bank.
Yeah, I mean, I was kind of advocating, like, since I got my job at my tech startup, I was advocating for a lot of people to join the startup scene because I was like, listen, big tech, that Google, Meta, Microsoft, they're all firing people. They all are cutting back on, like, especially tech talent, and so hey, you guys should join the startup scene. A lot of good startups, especially in New York City, they're hiring at a fast pace. The startup tech scene is good. But now, because of this, it's like, well, fuck, the big tech companies are kind of kicking a lot of these engineers to the curb. And at the same time, now the startup scene is getting fucked. So just tech as a whole, I mean, you said that, I think you mentioned it before about like this year is not going to be very good for tech. And now I'm also kind of worried a little bit for my company too, because we're a startup. I think we should be fine, but it's just it started from big tech, and now the smaller guys, the small startups are now getting affected too. So
I have a question, guys.
Yeah.
yeah.
Like, just in general, do you think this might lead to only the people that were really interested in tech, that were really like driven by it
Mhm.
to the core, to stay, and then pretty much everyone else who just came in for the money to dip soon? Like, do you think that's what's going to happen, or is it just going to like pretty much affect everyone around the same? Like, what are your thoughts more on the people that are in tech and what's going to happen to them, this year?
I think the mainstream is going to change a bit, but in terms of numbers, I don't see it being like a huge increase or decrease. I would say it's about the same. Because the reason why is like in my idea of like, startups, it's all about opportunity and what the market wants, right? Like startup's not really, actually a startup until it's either profitable or has traction or has some sort of metric, right? In this case, in a
Mhm.
recession, it would be like actually a, a profitability sort of perspective. So when people lose, right, or like startups that like don't do well, there's other companies that like fit that role, right? Because it's like now in a recessionary like economy, okay, maybe like certain things are better, right? Like if you're not buying Coke, you're still buying Pepsi. Like not to say that Pepsi's trashier, I think it is, but like people use the substitution effect, right? So if we look
Mhm.
at it from that perspective, I think maybe people that like might have had an idea on how to make like easy profit or easy money on like current like on previous ideas from an expansionary market will just either divert their attention to a recessionary opportunity, or they will leave and other people that have ideas in a recessionary like environment will actually come in.
Mhm.
That's what I would think, because like either way the world doesn't stop just because the recession happens, right? Even though it feels like that, like this is not the first time in history, certainly won't be the last. And it's just
Mhm.
a matter of like, okay, how does these things maybe like get pushed over, but these things come more into to the forefront, right? But it doesn't change the numbers.
I would agree with that. I think also, during these recession times, I mean, recession is a big word, but during these downwind times, this is like where like the people who are really passionate about the products or just really serving your customers, this is where like the really good products will now come out because there's going to be less money. So you actually have to be really good. You can't just focus on just bullshit. And I mean, I would agree with that statement too in terms of like the numbers. I don't think will change too much. And I think a big thing is everyone has been making so much money in tech. I mean, people would be like, no, like this year is bad, but next year we're gonna be making tens of millions of dollars. I think the fact that there's been so much money being made for such a long period of time, it's gonna take a very deep recession for years to actually get people to be like, well, maybe tech isn't for me anymore. So yeah, I don't see the numbers changing too much. Unless something drastic happens, like I don't know, like if I don't know if there's another Silicon Valley bank out there that also just caters towards tech companies. But if there is and they go down, then maybe. But no, I don't
Yeah,
see the numbers changing too
thankfully,
much.
they were like the main ones. They were like they were so much ahead of the competition in terms of how exposed they were to startups that they pretty much like took up the
Yeah.
whole industry of banks for tech companies. Luckily, so there's not going to be another one. So
Yeah.
Okay. Good.
From what I understand, even like bigger companies, because they also have to go through much more legislation, Arrow, like they wouldn't
Yeah.
necessarily want to pair with SVB because it'd actually be like more costly to do business with them compared to like let's say you're Google. There's no shot you're going to go for like a smaller bank when you go for a bigger one, and then you have like less headache because they have more services, right? Like just look at it from a manpower perspective, right?
Well, yeah. Like I would say yes, except as Silicon Valley Bank doesn't seem too small, right? I mean, George
It's
mentioned
not
before it was a top
small.
20
I'm
bank.
just
That's
saying,
top
why.
like,
20.
yeah, it is
No,
a
there are
top
some
20, but
decacorns.
yeah.
For sure, there are some decacorns involved, but like yeah, probably the
Yeah.
biggest guys didn't really have money in the Silicon Valley Bank.
Yeah.
Yeah. Nor should they be affected too much.
Right.
Funniest thing is there's so many fintech companies that got, you know, fucked by this.
Mm,
That begs the question, like, can you really give money to companies that work in the finance space that can't even predict that, potentially putting all your money into one bank is not a good idea, and they're unable apparently to read the balance sheet of a bank to realize things aren't that good.
who knows?
I would kind of reevaluate my investments if I was in the space of investing in
Mm.
fintech.
That's a very interesting thought that I didn't actually think about. All of those buy now, pay later, all those fintech companies. Mm.
Yeah. Well,
Yeah.
it's almost up in terms of time. This was really good talk. We'll definitely reconvene next week and we can either continue, but we have a lot to talk about. I have like newer ideas as well. And like, maybe in light of this, how to have good finance for your own startups and the outcomes of this. So look forward to talking
sure.
about that next week. Yeah.
Hopefully we were ahead of the All In podcast on covering SVB. I'm not sure.
They probably did. Yeah. All right. Well,
Yeah.
see you guys. Yeah.
So yeah, it's good talk.
Yeah. Bye.